Hello, everyone, and welcome to this new episode of Smart Outsourcing Talks. And today we are going to talk on right from proposal to payment. And you know, before so we have today's our guest, Tal. Tal, welcome to the show.
Thank you very much for having me, Manoj. And hello,
Hmm.
everybody.
Yeah, but let me just first set the context for today. Okay, so most of the times there are no accounting firm owners who would say, "Hey, I don't want to grow." Okay, every firm wants better clients, they want higher value work, they want stronger margins, they more want more predictable cash flows, right? But here is the irony that many firms don't only have a growth problem, they have a revenue leakage problem, right? And it starts much earlier than people realize. A proposal that is too vague, a pricing that has not been reviewed for years, scope that quietly expands, or invoices that go out late, or payment that needs a constant follow. And before long, profitability becomes unpredictable, not because the firm is not doing a valuable work, but because the operating system about pricing, about scope, about billing, and the collection never designed to protect that value. And today's conversation is not just about getting paid faster, okay? It is about how accounting firms can build better discipline right from proposal to payment so they can protect their margins, improve their cash flows, and scale constantly without firefighting. And joining me today is someone who spends every day helping firms identify and eliminate these hidden revenues leaks. So Thal, welcome to Smart Outsourcing Talks.
Thank you.
And before I go ahead, let me just introduce Tal. So Tal Ben Bassat is COO and CFO at Anchor, where he works closely with accounting firms on workflows, billing, pricing, and operational efficiency. What makes Tal's perspective especially valuable is that he has seen the profession up close, and that too from the multiple sides, because he's a CPA, he's an attorney, and an MBA from London School of Business. He has worked with firms like PwC, KPMG, advised businesses as consultants, led product and commercialization at MasterCard, and also built and ran his own tax practice. So, very, very varied experience. So, he understands not only the technology side of it, but also the real operational pressures that firm owners faces every day, uh, pricing work correctly, managing scope, getting paid on time, and building systems that scales. So, Tal, it is pleasure to have you in this show. And just to start with, so tell me, do you think that cash flow problems begin with the invoices aren't paid, or is it much earlier, or what is your perspective? You have seen it all.
So, firstly, thank you very much for having me here. And it's a pleasure to be in front of everybody that are watching the episode. Um, when we thought about Anchor in the beginning and thought about how we can actually solve the problem that probably everybody that is watching this has, which is getting paid, we realized that the problem does not start at the invoice.
Hmm.
Actually, the problem starts very early on. It starts as early as the proposal, and I will even go further and say it actually starts with the position of the relationship, with the discussions we have with our prospects or lead at that time, even before they become our clients.
Okay. Can you just give me some examples or use cases where uh, maybe client thought it was actually collection problem, but it was not so.
Yeah. So one of the things usually you will see is that people always will say we have an account receivables problem. In many cases, it can come from usually from two or three reasons. The reason that is actually based on the research we did, the research that is less likely is because they just don't want to pay. Most
Mm,
clients want to pay. They appreciate the service. They understand the value. The nature of our relationship with our clients is a recurring relationship, so they usually want to pay. It usually comes up to how they manage their accounts payable, their trust in the current systems that there are, and so on. And what we learned is that the best way to actually solve that problem is to go to the beginning, to the way you manage the proposal, the engagement letter. and
mm,
how you structure the services, the descriptions, the scope of the work.
mm,
One of the biggest gaps is that if the scope is not defined in a good way, what's in scope and what's out of scope, then they're going to have issues with collections. So the
mm,
invoice will go out, the client, even if they pay automatically, they might come back and say, this is not what I paid for. And companies that are spending time on actually standardizing their services
mm,
enjoy much better collections. That means that the team member cannot, for example, create a service that has too many moving parts, because then
mm,
also as a business, it's very difficult to follow on that.
mm.
It creates a lot of operational burdens to the firm, and also makes collections much more challenging.
And Tal, exactly like you said, this is more like a relationship business, and I've seen many firm owners, they treat that way. So, and they feel that, okay, if it is relationship, then, proposal is just secondary and it's like just a piece of paper, right? They don't treat a proposal as a very serious, agreement between the customers and the firm. So what is your take on this?
Yeah. So proposal has multiple roles, and
Hmm.
actually, Anchor today has about 2,500 accounting firms using us, and that's just from the
Wow,
last
that's cool.
3 years in the
Hmm.
US. Yeah.
Hmm.
I met hundreds of firms that I personally met, so there are probably more,
Hmm.
that did not have a proposal, an engagement letter
Hmm.
signed with their client, or
Hmm.
had a very limited one. Now, if I'm going to wear my attorney hat without providing any legal advice, that put firms at risk. Because whenever we take any action which is based on our advisory side, everything we do is basically is professional advice,
Hmm.
uh, we can be sued. We can be liable for our recommendations. Even sometimes I meet accountants that just give like an hour of consultancy to someone, and they will charge $200-300 on that without
Hmm.
any legal document involved.
Hmm.
If that person is going to take an action based on this recommendation, and the action is going to lead to a negative outcome, you can be liable for damages. And that's a big thing. So for example, as a company, the way we solved it was we created our clients a way to send invoices without agreements by actually adding kind of a legal terms to the invoice that the client can be referred to. So there is going to be some sort of a legal framework there. So the one side is the legal framework. The other side, which I would argue is even more important, is the side of managing expectations with your clients.
Hmm.
That's what I mentioned before, right? What I'm going to provide, which type of services I'm going to provide, which type of services I'm not going to provide, what
Hmm.
happens when things change and things like that,
Hmm.
right? And you want to create a place in which you can have a discussion with your client before even signing the engagement letter,
Hmm.
right? So for example, on Anchor, we created an area in which you can actually do a walkthrough with your client on the proposal.
Hmm.
Why? Because when
Hmm.
you do this walkthrough, you can explain to them about, for example, your packages, right?
Hmm.
So you
Hmm.
can talk to them about the value you can drive for them, right? Every
Hmm.
package is a different value. It's a
Hmm.
pricing, it's a
Right.
value-based pricing as well, if you
Hmm.
want.
Hmm.
And then based on those options, what you can provide, what's included, what's not included. Usually that's also going to be recorded. So now when
Hmm.
your client receives the engagement letter, they know
Hmm.
exactly what type of service they're going to get from you. If it's
Hmm.
tax work, what type of schedules, and then things come up and people
Hmm.
remember things they forgot to tell you before, and so on. So I really believe that this side is probably, I would say, even more important than the legal side, because if this is structured the right way and managed with the client the
Hmm.
right way, it's
Hmm.
going to decrease the likelihood of any legal challenges in the future anyway. And of course,
Hmm.
going to make sure with the right tools that you're also going to be able to collect against that.
And Tal, what is the kind of missing things that you see today in most of the proposals? I'm sure when you onboard into Anchor, you will see a lot of gaps and stuff like that. So, what are like 3 or 4 major gaps that you see in most of the proposals?
So we said one, no proposals. That's a gap.
That's a good one.
And as I said, it happened quite a lot. Two, and I see is missing in proposals is what we talked about, we call it dynamic pricing, but basically demand-based pricing, giving your client options. One wants to select a package or a tier that is based on the value they are looking to receive from you, looking to provide to them. In the world of sales, when you think about it, there is something called value-based selling, in which we have a discussion with the client, we do a discovery, try to understand how or what type of value and impact we can drive for them, and the pricing is actually comes from that. This is the goal of those tiers. It's not just I want to push him there or whatever. This is kind of a bit, we can maybe spend different time on that. You want to show them optional services. So firms have so many services they can offer to their clients. They show them one, two of them, maybe something they discussed about. But there's so many other value options you can give to your clients. And guess what? If you're not doing that, someone else might do that or offer that instead of you. And it's a value your client needs. And when we worked with Hector Garcia, and we actually added a feature called add-ons or optional services. So that actually allows your client to see your a la carte options, right? So then clients can select additional services. That feature, since we released it, helped firms to grow revenue by about 20%.
Oh, wow.
That's a lot of money. Same client revenue, yeah? So it's not even just in total. And a third thing I will say is a lot of automations. So one of the differences of Anchor compared to what you see usually is that Anchor's agreements are not a PDF based. It's not like a static agreement. Right. You can build in automations. For example, annual automatic price increases. I will say that about 80% or 90% of the firms are, okay, let's say differently. 100% of the firms want to increase their prices every year. Usually, we also give this recommendation to our clients. If you question how many firms actually increase their prices, everybody wants to do that. Most firms don't do that, or they do it every few years. One reason is because we feel uncomfortable to say that to our clients for some reason, although we tell them to say that to their clients. Another reason is the kind of it takes time, right? I have maybe 200-300 monthly clients or text clients. I need to go to a call with each one of them. It's very time consuming. And by the way, not everybody need that. And if I'm just asking for a 5% increase because inflation went up and I need to also adjust the payroll of my team members, I don't want to do that. So for example, you want to have a built-in mechanism that will tell your clients that every year the price will go up automatically by 3-5%, right? And then you want at the end of the year that will happen automatically. So why? Because you don't have to manage that later. It takes it off. Or if there is a discount should expire so you don't actually forget to take off discounts or promotions you give to your clients, which is one of the biggest things on revenue leakage. The fourth thing is a compliance mechanism. So what happens when change happens? We always say the only constant is change, right? Once a proposal is signed, the relationship starts. And then all the changes actually happen. The funny thing is the proposal is actually super small in the life cycle of the relationship. Most accountants will have clients for 10, 15, 20 years. What happens if something changes? What happens if you need to build out a scope? What happens if you want to change the scope of services, add services, remove them? How does that happen? Are you going to send the client a new engagement letter? Is the client need to agree or not agree or automatically accepted? So this is another thing we built into Anchor, and which helps our client to reduce a lot of the friction of their clients as they amending agreements on Anchor, as that's part of the capabilities to amend the agreement and the relationships.
Great. And Tal, when we're speaking about the pricing, a lot of times, when I speak to firm owners, they say, hey, look, how can I decide the pricing in advance? Because generally I talk to the client and I look at what is their budget, and then accordingly I kind of quote them. Okay. So what is your take on setting up standard pricing across the clients, or a price for a particular client?
Pricing is one of the hardest topics, I would say, by the way, in every industry, because it balances a lot of things, like, for example, the client willingness to pay, and the ecosystem and the benchmark and the location. There's so many questions here. We actually in the final stages of developing what we call kind of a drafting agent, which, based on the communication with your client, takes a lot of data. I don't want to mention all of it already, but basically also suggests pricing. When I was working for PwC, we wanted to build price a client or a project or a service. We had like this massive Excel that has a lot of areas. We had to plug numbers of time and effort things we're gonna do. The reality is that pricing, and that's one of the also the teachings of Ron Baker. Pricing should be based on the value you're gonna deliver. I know it sounds very high level, but how do I price? It's based on the discovery you do with your client, and then it's based on also the level of service. A lot of services can be benchmarked. Okay, a lot of services should be also priced based on the amount of work you're gonna spend, right? But one of the important things actually with pricing is to think about pricing as a range and not as a fixed amount.
Okay.
One of the reasons for the creation of the billable hour mechanism was because it's super difficult to estimate how much work I need to invest.
Yeah.
But anywhere our clients ask us, okay, so it's $200 an hour. How many hours is it going to take you? Right? Because they want to do the math in their head, because no one's going to open their wallet and tell you take as much as you want. They want to know it roughly.
Right.
One of the ways actually we recommend our clients to think about pricing is to use whatever they have today, but when they have a new client, to actually start using ranges.
Right.
Not just a fixed amount. What is a range? A range is, for this service, I'm going to bill you some amount up front. It's also kind of showing the seriousness. And then I'm going to, on completion or in stages, I'm going to bill you for a range of, as an example, between $1,000 to $1,500. Why is that? Again, it's about managing expectations with the client. That allows you later on to build a client, and as long as it's in the range, you can actually, the system will automatically pull the money out. If it's above the range, the client will need to approve. But what you did is you actually manage expectations with your client. So then if you actually end up working more, you don't need to eat up the fees. Because we can all agree that in the world in which pricing is unlimited, we would not feel stressed about, selecting a price. We might even do a cost plus or something like that. A lot of firms will have some sort of an Excel they're using, which looks into a service and the complexity of the service. It's one of the things, by the way, our AI is doing. So if it's, for example, how many bank accounts, how many locations, if it's and stuff like that, or if it's payroll and so on. And based on that in your pricing, you roughly want to give an estimate of how much you think it's going to be. And then, of course, you want to monitor the performance over the years and then adjust the price accordingly.
And the pricing is very sensitive as a subject, so and especially in a relationship businesses like ours, accounting. So what do you think it is something which is like a continuous process, or how do you firm owners should look at the pricing as their relationship with the client matures?
It's a good question. I think at the end of the day, we as accountants, as service providers, we want to be able to, justify the work we do, justify a premium we were asking for, a real premium for real, value and impact. That's what we need to aim and drive for. We can do our work as accountants, the bookkeeping work, whatever it is. The reality is that that's going to make us, it basically means we are doing pretty much a commodity work, because everybody can do bookkeeping. A lot of people can do bookkeeping. A lot of people can do tax. As service providers, people choose to work with us because they want to work with us, with you. Why? Because they trust you. They believe you're going to change something for them. It might start from a transactional relationship. I need a bookkeeper to do my books. I need to close my books. I need to do my taxes. It might start from there. But then our role as service providers is to create and use touch points or friction points. Friction points can also be positive, to identify, bring up additional impact points of value we can drive for our clients, and use that as a way to update pricing. That's the reality, and this is what people appreciate. At the end of the day, even as a company, right, we have outsourced services as well. I always tell them, I want to feel like you are part of the business. That means you're going to tell me, hey, you need to look into X, Y, Z, right? Maybe like have someone in-house that is doing the work, right? It doesn't have to be as much as, but just a few of those will be usually do the trick. when you give your client the feeling that you are part of the business and you help them to drive results, and not
mm,
just giving them a report, but actually helping them in decision making and giving them the added value, then two things happen. A, they will be more than happy to buy from you additional services. And
mm,
two, they will be more than happy to give you to pay a premium. And
mm,
that's how you actually grow your revenue more than the discussion of, hey, there is inflation, so I need to adjust my
yeah,
prices.
mm,
This is how you get to the real area. And it's not just about advisory. Advisory is a part of it. and
mm,
and the other side is getting the insights from what you see, what your team members are doing. I did a session one to one of our clients, and I named it Be Your Client Heroes. It was actually aimed to the clients, to the employee story of our clients. It was all about kind of rethinking what is the service we provide as accountants. At the end
mm,
of the day, in most cases, our clients are people that started a business because they have a dream of doing something. They wanted to change the world. They want to do something special for themselves, for their homes. The reality is that 90% of the businesses will go under in the first 5 years. How amazing it is that we as accountants can actually be there more than just doing the reports, but actually come over and help them to keep the business alive and to
mm,
grow the business.
mm.
And for that, you really get the pricing up. That's where it really drives the value.
Sure. Yeah, makes sense. So moving ahead, Tal, so you have won the client. Now you have defined the engagement. Now comes the most difficult part. How to actually get paid, right? And when you look at it, that most of the firms, are excellent at managing clients' finances, but they often struggle to get paid. Okay, and I have been a CFO for a lot many companies, and I know how the cash flow it becomes difficult. And uh, we used to have these processes called dunning emails, and chasing and chasers and automating that and stuff like that before it gets paid. So I'm sure Anchor has gone into that category, that it just killed that process entirely, right? So tell me little more about how the firm owners should think about chasing the payments.
Yeah. I will start by explaining the problem, what we see today. A tax practice, maybe have 1, 2, 3,000 engagement letters or tax clients, right?
Mm, mm,
Many cases, they're not even going to sign them on any type of legal document, but that's a different topic.
mm,
But then the way it usually works is, and doesn't matter which tool they use because everybody operates the same way.
mm,
They finish the work, they send the
mm,
return to the client with an invoice, and they tell the client to submit it. You have to pay me my fees. A lot of people will say we have a mechanism. We don't submit unless we get paid.
mm,
The reality is that three things happen. One,
mm,
uh, some clients pay, and they pay quickly. That's fine.
mm,
Usually, it will be something in the region of 20% of the clients. By the
mm,
way. And on time, that usually means on time for accountants. On
mm,
time for accountants usually means aging up to 90 days. Yeah, that's
mm.
usually on time for accountants. Which is in today's world, it means we're actually losing money on inflation and on interest we could have made on the money, and we basically become the bank of our clients. Another thing that you'll see in other situations is that firms actually will not submit returns, so they
Mm,
will have AR. They
mm,
are very likely going to turn into a write-off. So
mm,
actually, you lose money out of the pocket.
mm,
Another use case you'll see is that people will pay right at the last moment they can, so the end of the extension period.
mm,
Um, I think these are the options. Maybe not four, maybe three. Now,
mm,
during this entire time, the
mm,
firms will spend a lot of resources on chasing those clients. You mentioned dunning emails.
mm,
Most firms will use some sort of a tool to send reminders that a human need to create, or
mm,
use their everything from the admin to the manager to the director to the partner to chase this money.
mm,
On average, it's about 5 to 10% of the time that is lost. And of
mm.
course, the receivables are delayed. Doesn't work.
Yeah.
Doesn't work. Recurring clients has the same problem. They sign the contract, takes time to get them to connect the payment method, to pay them something up front. A lot of things change. About 20 to 30% of invoices of businesses are actually one-offs or things
Mm,
that change. Those
mm,
invoices, even if you use a tool that allows you to automate the payments, when you
mm,
have a one-off, you send it and the client need to pay that. You
mm,
cannot take the money yourself because the client never gave you authorization. So they can
mm,
actually dispute it later, or they can actually sue you for taking money without the right. So it's a big problem. The solution is not just automating small solutions like dunning emails and things like that, because it works partially. The reality is that the problem is created because it's kind of siloed areas, right? You had the agreement, you need to create the invoice, you need to send it, you need to chase that, and so on and so on. We didn't even go to the other part. And the way we approach is completely different. The agreement is where you define the kind of the billing with your client. So I'm going to bill you, for example, $1,000 for the return. I'm going to bill you, $750 a month for the bookkeeping, and so on and so on. The client connects the payment method to the engagement letter to sign on it. So now you have an authorization form, like an agreement that has all the information you need about the billing, and you have the billing, so the ACH or card. Okay, if it's a card, the fees are on the client. So once the agreement is signed, the system automatically sends the invoice, pull the money out into your account, and also reconcile it to your general ledger, to your QuickBooks. But created the invoice, deposit, and matching them. Now, we support every type of use cases. So our clients that have tax returns, for example, when they finish the tax work, they click Bill Now. And then the system automatically sends an invoice, collect the money, and reconcile. Same for ranges, unit-based, hourly. It's all possible because Anchor created a compliance mechanism, kind of ecosystem between you and your client. It's a two-sided ecosystem. So that enables that. Our clients have, I would say, close to zero AR. You always have those that don't have money in their account, but zero DSO. And that's a game changer. So think about your live finished collections by the, let's say, 20th of April. This is how you make sure that you're getting all your money. And it's super important, especially as things change, when agreements are amended, and so on.
Have you come across the cases where clients are not comfortable putting the payment methods
yes,
in the system? Yeah.
I will always.
How do you deal with that?
So where did that come? Again, we always want to start from the problem, from the pain. Where did that come from, right? Manoj, how will you feel comfortable if I'll tell you, hey, give me your card information or your ACH? I'm going to bill you for whatever I feel comfortable to bill you for. You will not feel comfortable about it, right?
Yeah.
Perfect. No one, I will not feel comfortable. Put it aside, the reality is that as consumers, we are educated to use things like that, right? How do we pay for everything in our life, from our smartphone to our Netflix? Almost everything is paid as a subscription. So when we looked into how the world has been going on for the past 30, 40 years, the world of subscriptions and so on, what we learned is that to be able to give enough, let's call it comfort to your client, the client need to have also the ability or transparency to see this information.
Right.
This is why on Anchor, the client has a client environment in which the client can see like you the agreement, the invoices, an audit trail of all that happened in the agreement, including changes and so on. So that actually eliminates the need to change agreements. But more than that, it actually, if you think about it, Anchor sits in the middle, kind of as a compliance mechanism, which means, hey, client, you approve the service provider to bill $1,000. That's the only thing they can move. If they want to move more money, you as a client have to approve. So that creates a level of transparency and simplicity that leads to the trust to do that. Once they see it works, usually they're going to ask you to use that as well for their business.
Also, Tal, so I completely understand. One set of clients that a lot of times we come across is also that they are little larger clients, enterprise clients. It could be they have their own payment processing methods, or they may have their own, bill payment or tools. So how does actually this works?
It's a great question. It's a great question. So, like you said, some companies might use Ariba or Bill.com, and they will manage their and they will manage their AP process there and AP approval. So yes, that takes some of the power from you. The reality in the past few years is that also large companies move to spend management type of behavior, thanks to the big companies like Ramp and Brex and the like. So that means they know in advance and they start. They just need the ability again to monitor that. If I use tool like that for my spend management. I use it
Mm.
because it allows me to put controls.
Right.
The way it works with Anchor, you can actually send your client engagement letter, for example, without requesting payment information to be connected.
Mm.
One option they have is to connect, like a spend management or push the invoice to their AP software.
Mm.
But doesn't matter what happens because Anchor has a built-in mechanism like the Dunning emails you mentioned and some more
Mm.
that we are working on. So they will get reminders automatically. You can even set it up. You can set up the text. They get it directly from your inbox. So that
Mm.
makes sure they know it comes from you.
Mm.
And the idea there is, again, with the transparency they get on Anchor, in many
Mm.
times, even when we go to those discussion, we're gonna tell them, listen, you can
Mm.
see everything here. It's actually
Mm.
better than even your spend
Mm.
management because you
Mm.
have an area that you can see all your invoices, the agreement. So
Mm.
we basically give them better control. And by doing that, we actually convince them to also collect the
Mm.
payment information because they do that.
Mm.
Companies don't pay Zoom with a check
Yeah, absolutely.
or a bank transfer. It doesn't work
Yeah,
this way.
yeah. Even Google and all that, right? So, yeah.
Exactly.
Also, Tal, I'm sure that chasing payments, it's a very sensitive thing, and many of the times the relationship could also go for a toss. So, where do you think this technology or maybe tools like Anchor really helps in kind of maintaining those relationship and not payment doesn't come as a friction? So what's your take on that?
For me, that really relates to what I said before about managing expectations with clients. Think
Hmm.
about a tax situation. Think that you have a
Hmm.
client
Hmm.
and the client does not pay you. You send a tax return, um, send the invoice, or maybe you submitted a tax return. Now you
Hmm.
need to chase the client. Very quickly, it becomes uncomfortable, probably for
Hmm.
both sides, by the way. That can lead for the client to walk away. But
Hmm.
that's not because it's a bad client or it's just because the
Hmm.
client, they're super busy in their day to day, right?
Hmm. Hmm.
And maybe they have issues. And yes,
Hmm.
some people say that people delay payments on purpose. Yes,
Hmm.
that happens. Some companies, some businesses, especially SMBs, might delay payments and stuff like that. But even for that, you have ways to solve that, like installments and things like
Hmm.
that. I think that the best way to remove, those challenges is again in the beginning
Hmm.
by having an agreement that outlines what is going to be there. I'm going to bill you this amount of money for the service. Okay. Upon delivery, the client is not going to audit your work anyway. It's not like they're going to review your tax work and say, oh, your tax work is amazing. Now,
Hmm.
you might want them to comment on it or say received or whatever. But think about a different world in which instead of sending an invoice and then chasing it, you just tell them, hey, here's the tax return. I'm going to
Hmm.
submit it on your behalf and I'm going to bill you now. And you click a button, the invoice
Hmm.
goes out, the money comes in, just like when they
Hmm.
buy on Amazon, by the way.
Hmm.
No one is expecting to get a TV, use it for 2 months, and then pay for it, right? Doesn't
Hmm.
work this way. So
Hmm.
now you change the way it works. If the client has an issue, they're going to come anyway to you because, again, this is a relationship, right? It's a service provider, it's not a software. If they have a problem with software, they go to the company. Now, it really changes the way you work with your client, and then you also don't need to fire your clients
Hmm.
and that's very important. It also
Hmm.
prevents negative behaviors. For
Hmm.
example, a
Hmm.
lot of firms at
Hmm.
some point will tell their clients, listen, I'm going to give you a discount if you pay by the end of the week. So now
Hmm.
you basically taught your client that if they delay their
Hmm.
payment, they're going to get a discount. You don't want
Hmm.
that. We
Hmm.
actually created a mechanism that if they signed in engagement letters in set amount of days, they get a discount. And then you
Hmm.
can also tell them as long as you maybe pay up front or something like that. So it actually promoted them to sign faster and things like that. Also
Wow.
connected to your question from before, which is
Hmm.
about people connecting the payment information. They will do it if they
Hmm.
think it's valuable for them.
Hmm.
So you prevent this negative behavior of your clients. And also you don't need to use mechanisms like, again, I'm going to give you like a late fee or things like that. Late fee is very nice. But
Hmm.
if you have a lot of, most cases, what we see, even people that use late fees, when the client at some point will tell them, yeah, I'm ready to pay, just
Hmm.
take the late fee out, I can do it now.
Yeah. Hmm.
So then the firms again, so it's kind of a mechanism, a passive aggressive mechanism.
Hmm.
So again, solving it in the beginning, connecting the payment information, being a system that allows you to build those things, also other scope charges in a compliant way, and then just pulling the money when you did your job.
Yeah. And also, this is a good point. In fact, it also kind of incentivizes, good customers, right? So if they are able to kind of give the documents in time, that will help
Yes.
CPA firms to reduce their work stress because they got papers in
Yeah.
advance. They can file right returns,
It's
so they don't like,
actually, yeah, yeah. And you actually
taking.
reminded me, it's a really good example. One of our clients, it's a great accounting firm. One of the founders, his name is Nick Boschia. He's the Balance CPA.
And Nick
Super.
was just few weeks
Okay.
before I had a podcast with him. Yeah.
So Nick, super smart guy, hard worker. Nick is, he's really big on tech as well. And actually we did something really impressive together, which is created a 3-tier pricing for his tax. He has thousands of tax clients, right? And we did so we do it. This was the third year we did it. And what we did was he sent us like a list of his clients. We already have it in the system, but anyway, no work on his side. We decided about the pricing, and we created together 3 tiers. And basically, tier number 1 was, hey client, if you're gonna sign and pay me upfront amount by this date, let's say that, for example, the first one was end of December or January, I don't remember exactly. You're gonna get that price. The price was already above last year, right? And then by then, if you're gonna sign and pay me by, let's say, for example, the end of February, it's gonna be a different price, right? Higher, right? And by the way, if you're not gonna do any one of those, you're gonna pay a 30% premium. And these were the guys that really do everything on completion. So now the result was that he increased his same client revenue by about 20%. Same client revenue by about 20% year over year. And he finished all of his collections in April. So by the end of the tax season, he had 0 account receivables. And this is a business that would have chased $1 million AR before coming to Anchor. $1 million account receivables. By the way, today interest is, let's say, is 5%, for example. That's a lot of money you're losing. And that's even put aside of the work. Now, the way it works on Anchor, he used to spend a month between himself and 3 other team members creating engagement letters before. He used to do it before as well. That's a month for 4 team members, including a partner. Now the entire team spends maybe a few hours on it because we can create all the engagement letters in different price points for him. Click, select all, and send. And then he can just collect the payment method when he's finishing the work, or some of it up front, some on completion. And we did another cool thing, which is he moved away from billing for a 1040.
Okay.
What do I mean? Most accountants will bill for a 1040, for a 1120, right? For a 990. But this is not the only thing we're doing here. A, the price can change because the client forgot to tell us some updates from the year. 2, there are a lot of additional services. A lot of firms these days, they will bill their clients for extension. About $50 for individual extension is $100 for a business extension. Guess what? Right. You do the work, it's an impact, you need to get paid. If you have 1,000 clients that you need to do extension for, it's a lot of time. If you charge $50 each, it's $50,000. That's
right. Yeah.
That's money otherwise left on the table. Right. I'm sure that no one listening in this conversation, I always say it this way because it makes people laugh, but I'm sure no one in this that's watching this one has any clients that have just one question during tax season for just 5 minutes, but some firms have those. So guess what? They're adding a service which is advisory. Hey client, if you want to speak to me, this is how much you're gonna pay. Okay? They might select it when they sign the engagement letter, and then you're gonna get your money. They might tell you later, hey, I have a question. You tell them, you remember we had on the proposal this optional? No problem. Let me just add it back into the proposal. It's already there waiting to add it to the proposal, to the signed agreement. So instead of sending in your agreement or just an invoice, you can just add to the agreement and then bill against that. Okay? And they add things like audit protection and a lot of other things. But basically it means that the way to increase your revenue is not only sitting on, doing the 1040, but a lot of additional service you can offer. And by the way, a lot of what we see, a lot of firms focusing on business returns, moving business clients to monthly recurring services, right? So for example, instead of billing your client for $2,400 a year for 1120, you will bill them $300 a month. Now, this is something we learned from our clients. It was a really good learning point. And we told them, why do you do that? Because people usually bill once a year. We also started, by the way, for 1040s. And they said, well, it's better cash flow for me and for my client. It's much more sticky. I don't need to chase people in December or January to actually do to understand if they're going to work with me or not. So all of a sudden I can have a drop of number of clients. So it's really affecting my forecasting and revenue forecasting. How many new team members I need to bring from Manoj, for example, that help me in tax season. And it helps them to increase their revenue, because before they did 1120, now they do 1120, and they do quarterly review, and they do additional small services they add on that. So we saw people going as much as 50% revenue increase by moving from an annual 1120 to a monthly billing. A lot of other reasons, and we're helping a lot of firms do that shift as well. And Anchor is a mechanism that allows you to manage volume of transactions, of clients, of agreements in one place. Because on Anchor, again, you don't need to send new agreements every year. You can just amend them. Saves a lot of the work, actually. You can send if you want new ones, but you don't have to.
And the way I see is that Anchor in a way is just not solving the chasing invoices, but actually it's a mechanism to grow your revenue also. Otherwise, a lot of money was lying on the table that you never knew that.
Correct. That's what I always tell people, and I even calculated to a firm that joined us recently. I calculate to them that it's Anchor drives close to 10x growth in their revenue. Close to 10x growth of the cost of Anchor, at least a year, because you have a mix of the annual automatic price increases, the packages and optional services, the ability to amend agreements. That means if something changed during the year, you don't need to wait to the end of the year and then change it. You can change it now. A lot of other things. When you really think about it, you need to think about revenue in 3 buckets. One is how I price my revenue, or how do I, so the first part, right? So that will be like the proposal, the packages, the discussion with the client about the impact you can drive for them, and the tier pricing that can justify that, and things like that. The second thing you think about the pricing is how I'm going to collect my revenue. That's the mechanism that allows you to pull the money from the client. You don't have to chase AR. So if you bill a client for 100, you get 100 in 100% of the cases. Yeah. The third part is how you retain your revenue, and that means how you don't spend money on multiple tools, on card fees, on things like that. When those 3 are are aligned, then you really maximize the potential of the business.
Yeah. And Tal, last time I think we were also conversing that you were telling that the firm owners who are looking to make their operations efficient, that most of the times when they use an offshoring, then signing they have to get the form 70 to 16 of IRS, signed, and so how Anchor solves that problem.
So we learned on that again from our clients, and our clients said we need to sign our clients as 70 to 16 for offshoring, right? Disclosure to the IRS. And we built in to the engagement letter an area in which you can add a 70 to 16. So that means when the client signs the proposal, the engagement letter, part of the stages is confirming that they agree to the terms of the 7 to 16. So once the client signed the agreement, you have a digitally signed, downloadable if you need to, engagement letters that has all the payment terms, the legals, the 7 to 16 there, the services, the prices, everything in one place. They can even do it from their smartphone. It's pretty cool. But the idea here, you lock in all the compliance aspect, the pricing aspect, the payment aspects in one flow. I always say that what Anchor does, we are not automating processes. We are eliminating processes. because automating can get you so far. You're always going to have something you need to kind of use some humans and
Yeah.
duct tape, right?
Mm,
When
mm,
you eliminate processes,
mm,
that can take you very far. For example, think about a lot of firms might use ACH forms to get payment
mm,
information from their clients. On Anchor, it's part of the engagement letter. So when the
mm,
client want to sign the engagement letter, they approve the
mm,
7 to 16, they connect the ACH or the card.
mm,
It's PCI compliant process, and we are SOC 2 Type 2 certified company. So that means that once they sign the agreement, you're done. Money
mm.
is literally flowing. And I think
Right.
one of the cool metrics is I'm talking sometimes to clients and they're like, "Oh, how is your experience with Anchor?" And they're like, "Oh, actually, I haven't been to Anchor for a few weeks." I was like, "What do you mean?" He said, "It just works. Money is going to my account. Business is going well. I go
Mm,
there when I need. Like something changes, then I go there. I want to see statistics. I want to see data and things like that. But I just get the
mm,
message the money's in my account."
cool. Yeah, makes sense. I think fantastic. So, Tal, if you had one piece of advice for a firm owners who constantly are busy working hard and yet wondering why cash flow still feels unpredictable, what do you tell them?
I have two things to say about it. It's never a good time.
Hmm.
Most firms you talk to about things, about changes they want to do in the firm, they will tell you it's not a good time.
Hmm. Yeah.
Um, it's postponing the inevitable, right? There's no such thing. When had to learn about using AI, I'm in the office all day long for many hours. I couldn't find time to learn AI. One of my friends told me, "You just have to do it.
Hmm.
Find a way." And I found a way, and it helped to exponentially reduce my manual work. I
Hmm.
had to find a time because there is
Hmm.
there is never a good time.
Yeah.
And the second thing is to prioritize the software you're choosing. There
Hmm.
is a lot of software out there. There
Hmm.
are a lot of services out there. It's super
Hmm.
difficult, even when we as a company want to buy a service or a product. So we try to focus on the people that we work with, especially if it's a service
Hmm.
we get, right?
Hmm.
We want to work with someone that's going to be in our corner when we need them,
Hmm.
right? Like for example, in tax season, you need someone that will be there if you need additional headcount. Um, but also you need to think about always how not to solve the entire problem.
Hmm.
Because the reality, we can never solve the entire problem. And the reality is there is no solution for the entire problem because nothing
Hmm.
can solve everything, right?
Right.
So even in the world of software, right, usually everybody know there is the all-in-one approach and there is
Hmm.
the kind of ecosystem approach. If you really look into that, you'll see that there are so many great tools out there. Uh,
Hmm.
Try to figure out which tools are actually the tools that actually solve you whatever you need in a specific area as large as possible, right? But then
Hmm.
they connect to other tools which solve everything that you need to the best in class in a different area that you need to, and they speak to each other. That will
Hmm.
make sure that you're always going to have the best in class in every area. It's also kind
Hmm.
of a module. So if
Hmm.
something even better comes out, you can just do
Hmm.
out and bring
Hmm.
the new one.
Hmm.
But you have the same, and the interconnection is usually with APIs and integrations. We work a lot doing integrations with a lot of partners. But
Hmm.
the goal there is to get the best in class. It will help you
Hmm.
because if you will search for the best for everything in one place, you will never find it good in everything that you want to be good at. It will be good in some areas, of course.
Hmm. Hmm. Sure. I think that's a great piece of advice. So, Tal, we come to the last part of this podcast is a rapid fire. Okay. So I'll do a rapid fire questions. Okay, and you have to just quickly answer in maybe a couple of words over a sentence. Okay. So here we go. Are you ready?
Go.
Okay. So one proposal mistake every firm should eliminate.
Not having a proposal. Or if it's a bad proposal, not standardizing
Fixed fee or hourly pricing.
ranges, but fixed ability to amend. Yeah.
Okay. Scope creep in one word.
Sorry, say it again.
Scope creep in one word, messing up with the scope in one word.
Prevention. What
Okay.
comes after my head.
One workflow that should disappear from accounting firms in the next 5 years.
Chasing clients in general, I would say.
Hmm.
In our area, it's for your money.
Cool. And complete this sentence, okay? The healthiest accounting firms are the one that dot dot dot.
Keep innovating.
Thank you so much. I think that was
Thank you.
fantastic. So, thank you so much for joining us today. This wasn't just a conversation about getting paid faster, but I think it was about building firms that operate with more clarity, more discipline, and ultimately more profitability. Because you showed the way that so much dollars was left on the table, and you also talked about how the ROI from the anchor comes up. Okay, maybe 10x more, right? So kind of a revenue that it generates. So, to everyone listening, if today's episode challenged the way you think about pricing, proposals, or cash flow, share it with another firm owner who needs to hear it. Thank you for tuning in to another episode of Smart Outsourcing Talks. We'll see you in the next one. Thank you, Tal.
Thank you very much, Manoj.